Shares of Salesforce have surged since the software giant released its fourth quarter earnings Wednesday, despite the growing influence from a slate of activist investors, including Elliott Management, who has nominated a number of candidates to the company's board, a prospect that CEO Mark Benioff told Yahoo Finance executive editor Brian Sozzi that he is keeping an open mind about.
The activist situation, I have never seen anything like this. What is there a resolution in sight? How does this all end, and how do you move beyond it?
Well, look, I can really learn from anyone, and I enjoy meeting new people, and I enjoy talking to folks. And look, there's lots of different levels of understanding of enterprise software. There's different understandings of our company, who our customers are. But it doesn't matter what grade all these folks are at. I'm trying to ingest and learn and understand their perspectives. I think it's extremely important that I have a beginner's mind. I like to practice the Japanese concept of shoshin. How do I have a beginner's mind? In the expert's mind, Brian, there's no possibilities. The beginner's mind, there's every possibility. And that is really my approach with everything that has been going on with Salesforce. And it's been great. And then out of that, wow, I was just really blown away with Mason Morfit and how he was able to just, grok what we're doing at Salesforce, but then deliver these, like I said, these decks, which outlined what we thought was just strategic directions for our company that really showed his expertise. And that's why we've added him onto our board.
Mark, you really, you've long been seen as a pioneer in software, but also in the business community. And you're a co-founder of this really large company. How has this been to go through a situation like this?
I'm having the time of my life. I mean, this has been 24 years. You've been along the way for a long time, too. You've been to all our events. You've talked to so many of our customers and our employees. And look, this is great. Who would have thought, 24 years ago when I was a few blocks away from here at the top of Telegraph Hill in an apartment overlooking Mount Diablo, before it had all this gorgeous snow covering that it has today, I would say we could never have imagined that we would have delivered, one of the very largest and most important software companies in the world. I'm very grateful to everyone who's been part of this journey, and I couldn't be happier with where we are today and where we're going.
Outstanding interview. All right, joining us now to discuss the growing influence of activists is Constellation Research Principal Analyst and Founder Ray Wang. Ray, good to see you, sir. I love that Shoshin, the beginner's mind stuff, but is Mr. Benioff really grateful and thankful for all the input of these activist investors? Because that's what I'm hearing there.
You know what? Mark is a great individual and leader in terms of being able to take different perspectives. I think he's making the best of what's going on out there. In the case of, that investor, I think they did provide some good value there. But a lot of these investors are what we call vulture investor firms, and they don't add value. And they're just designed to actually arbitrage the stock price. And that's when it becomes dangerous. That usually happens. It makes sense when you have a company that's in decline. They're no longer in growth mode. Salesforce is not one of those companies. In fact, Salesforce is a company that is in growth mode, and that's what made this attack seem very unusual.
So, Ray, why do you think sometimes they do more harm than good, and the risk there of leaving potentially the company more damaged than it was before these activist investors got involved?
Well, I'll take an example right now. I mean, in Salesforce, they disbanded the M&A committee, right? And they're going to put $20 billion back in stock buybacks. Now, granted that Salesforce has gotten to a point where they are one of the top, and if not only the number one enterprise software company in the world, but they can still make additional acquisitions. They can use that funding and acquisitions to help them, in terms of improving and taking themselves to the next level. You looked at companies that haven't done that in the future, and they can't make those types of acquisitions. Returning money back to shareholders is the worst thing you can do if you're trying to grow your company. And if especially you're a founder-led company like Mark's, that's one of the things where you try to avoid. But there are things that also need some structure, like costs are out of control. Sales, marketing expenses are probably on the high end. And that's where PE firms and vulture capitalists come into play.
You don't seem to have the same reaction as investors do. The stock up more than 11, almost 12% on the day. You don't seem to be as embracing of those results as investors. Why?
Well, they blew their sales numbers out of the water, right? And they were probably going to do that anyways. And so, being able to actually come in at those, come in at the rate that they came in, I mean, people knew that they had a good quarter. They didn't know how good of a quarter. The activist cloud actually was what was driving down the stock price. They are still down from their highs, right? But, we have a price target of them, in the 200 range, right? But that's, we expected that. But the activist cloud was really what was clouding the message.
Right, when you take a look at these activist activity and numbers here, 36% jump in 2022 compared to 2021. There was 235 activist campaigns here. Technology, the tech sector was the most frequently targeted sector. What do you make of that trend, the opportunistic, thinking here amongst activist investors when it comes to tech? And do you think that trend is going to continue this year?
I think it's going to continue. You follow the capital flows and you look at the amount of money that PE firms like Thoma Bravo have raised, right? And Vista Equity have in their funds. There has to be an exit somewhere and there has to be a beginning somewhere. And there's someone always at the end of the deal. For the vulture capitalists, there is someone at the end of the deal. And it's been these PE firms that are willing to take a company back when they're actually battered, take them down, fix them, and then say, hey, look, instead of focusing on 17 different things, you should focus on 7 things and, concentrate your activities here. And that's usually what those firms do. They have a playbook. They put that playbook into play. And of course, the companies become profitable, but they no longer are seen as leaders. It is very rare for a company taken over by any of those firms to come back as a leader in their space. Look at Citrix. It's no longer a leader. You look at what's happening in, what happened to Informatica, no longer seen as a leader in the space. All these companies are taking hits. SAP got hit by Elliott Management, same kind of challenge. I mean, they don't have the capital, can't put the capital to put into R&D for them to actually come out of the spin that they're in.